Why is BTC stuck around 30K? I mean, that chart is just really, really flat. And even with the kind of little mini explosion that we got with XRP, obviously XRP and alts were the big winners there. BTC's chart, it just sort of pops up to 31K ever so briefly and then pops right back down again. Why do you think we're stuck around this mark? Is it a crypto related thing? Is it macro? Is it both? What are you seeing?
Welcome back to Library of Wealth. In the latest interview with Guy from Coin Bureau and Ben Cowen, they address the current state of Bitcoin and why now is a crucial time to watch the crypto market. Guy expresses concern over the persistent stagnation of Bitcoin at the $30,000 mark and advises being ready for possible unfavorable scenarios. Despite minor fluctuations, Bitcoin's chart remains relatively flat, prompting Guy to seek insight into the reasons behind this stagnation. Ben Cowen draws parallels with the pre-halving years of Bitcoin, particularly 2019, and notes how the crypto market often stalls during such periods. He emphasizes that crypto's performance seems more dependent on liquidity than traditional equities. While the stock market can climb the wall of worry driven by earnings and other various factors, cryptocurrencies, especially altcoins, appear more susceptible to liquidity trends. The recent SEC news and ETF applications have created anticipation and uncertainty in the market. Moreover, regulatory concerns surrounding firms like DCG and Binance, coupled with the changing stance of Nasdaq on crypto custody, further add to the overall uncertainty. Let's get into the latest interview with Guy from Coin Bureau and Ben Cowen, where they discuss the intriguing factors behind Bitcoin and the impact it's having on the crypto market, as well as the uncertainties surrounding cryptocurrencies amidst the evolving economic and regulatory landscape. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
So basically, we saw something similar play out in 2019 as well. We call them the pre-halving years, right? Because we care a lot about Bitcoin. Most people know them as the pre-election years, right? And in pre-election years, the S&P typically climbs the wall of worry for a lot of it. The S&P will climb the wall of worry until it has sufficient reason not to do so. And the two main reasons that I think that it would not climb the wall of worry would be either the reacceleration of inflation, which we haven't gotten yet, or the labor market finally softens up. So until one of those two things happen, the S&P can climb the wall of worry, or if there's a major geopolitical event, but we can't plan for that. So again, the S&P loves climbing the wall of worry in the pre-election years. What's interesting is we actually saw a very similar move. Like, I mean, look over here in 2019. So the orange line is the S&P 500, and then the sort of these candles that you can see, that's Bitcoin. So what's interesting is that the S&P basically went up for the entirety of the pre-election year back in 2019. But we also see that Bitcoin kind of went up for part of it, but then it sort of stalled out, right? It got stuck at the station while equities continue to go up. And one of the reasons I think that happens is because I think crypto is more dependent on liquidity than the stock market, right? So the stock market, of course, cares about earnings, that they care about a lot of other things that crypto projects don't really have. Imagine if altcoins had an earnings call. Hey guys, we only got hacked 3 times this month or this quarter, but our community is still really strong. So go team, go. I think that crypto is more so a function of liquidity. So like if you look over here in 2019, maybe you can kind of see this. So this is net liquidity. This is basically just adding up all the central, or at least a significant portion of the central banks, China, Japan, the United Kingdom, the United States, Australia, New Zealand, the ECB, and the UK. And what you'll see over here, right, is that like liquidity in 2019 wasn't really going anywhere. And when it doesn't go anywhere, crypto can stall out at the station, right? Like it doesn't mean it can't go up. I mean, we saw Bitcoin go up in 2019, even though liquidity is going down. We saw Bitcoin go up in 2023, even though liquidity has been trending down here since January. So we've seen this before, right? We've seen crypto do well in the pre-halving year. We've seen equities do well in the pre-election year. I think the difference is that the crypto market is more dependent on liquidity than the equity market is. And so like if you were to look at say the altcoin market, and if we overlay net liquidity onto the altcoin market, I mean it's been a pretty good fit for a long time. Look at this divergence here by the S&P on net liquidity. One time it used to track it quite closely, but again we saw the same type of divergence in the pre-election year of 2019. And they didn't reconnect, and also in 2018, right? And they did not reconnect here until early 2020. I think that crypto is more dependent on liquidity. Equities are dependent on liquidity, but also there's a lot of like just passive investors, and a lot more passive investors in equities than there are in crypto, right? Like 401ks and people that just sort of buy stocks no matter what. So I think that's really the reason. I think it comes down to liquidity, and for equities, it comes down to a lot more than that. And so that's why crypto has kind of stalled here. And it's not to say that crypto can't go higher. I mean, as you just showed, right? There's plenty of altcoins that have popped off recently. I mean, XRP is one of them, XLM. There's definitely altcoins that have popped off recently. But again, the market as a whole is still somewhat struggling, I think, just because liquidity hasn't been going in a favorable direction.
We do seem to be in an uncertain period for crypto, don't we? We get a bit of good news like the SEC news just last week. There was obviously, as you mentioned, Rob, the ETF applications, which everyone kind of seems to be, I get the sense we're in this wait and see period. Everyone's just like, well, let's see what happens with this ETF then. And there's also plenty of uncertainty, isn't there, around the crypto space in particular. I guess there are still kind of clouds hanging over DCG. There's been questions around Binance. There's uncertainty over regulations. There's NASDAQ, I remember, recently said it won't be providing crypto custody. It kind of did a 180 on that. Again, I think that was due to regulatory uncertainty. And yeah, I guess when you couple that with this sort of uncertain economic outlook in general that you were talking about, Robin, on the one hand, everyone seems to be expecting this recession, which I think is still very likely. On the other hand, inflation is coming down. The labor market is apparently really, really strong over there in the States. So we're getting these really conflicting signals from crypto and elsewhere. Does this kind of confirm what you were talking about just a few weeks ago, Rob? Did people basically sell in May and go away?
I think for me, the reason that I've just focused more on Bitcoin, the only cryptocurrency I've bought in like a year and a half is Bitcoin. And I struggle to, when I look at their Bitcoin pairs, they just look like lower highs and lower lows for most of them, not all of them. But yeah, I mean, I think it's a tricky thing with the altcoin market because you really just don't know which ones are actually going to survive and which ones are not. And again, there's going to be some survivorship bias, right? Like, so in a couple years, when hopefully the altcoin market is in a real alt season, and maybe Bitcoin's at new all-time highs and the altcoin market's going crazy, you'll be able to look back and say, well, if I bought that altcoin in July of 2023, I would be rich, right? But there's also going to be some survivorship bias there because people are only going to look at the ones in 2025. They're only going to look at the ones that actually survived. There's going to be a lot that don't survive and then just go to zero, basically. So it's really hard knowing which ones those are going to be.
The global economic outlook presents conflicting signals, with expectations of an impending recession counterbalanced by decreasing inflation and a robust labor market in the United States. Guy raises the question of whether the sell in May and go away practice applies to the current crypto market conditions, echoing Ben Cowen's emphasis on Bitcoin as his primary focus due to the volatility and unpredictability of altcoins. Both agree on the challenge of navigating the altcoin market, given the uncertainty surrounding the survival of various crypto projects. While Bitcoin remains central to Ben Cowen's investment strategy, the altcoin market remains a realm of uncertainties, heavily influenced by liquidity trends. As the crypto market grapples with regulatory issues and an uncertain economic outlook, investors and traders must carefully navigate these uncharted waters heading into the latter part of the year. What do you think about the latest interview with Guy and Ben Cowen? And what are your thoughts on the reasons behind Bitcoin's stagnation around the $30,000 mark? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.